Hey harvesters, and welcome to the channel where I run simple and straightforward options trading to generate a daily income stream. And my name is Matt. In today's video, I'm going to go over the trades I executed for July 19th, July 21st. Didn't make a video this past weekend because I was just busy running around Mount Rainier State Park just for races and for funds. Super sore today. Decided to heal and recover. We're back at it today. So now let's get going. In today's video, I'm going to continue forward with talking about how I chose specific strike prices and considerations, how I run my account and my portfolio that's currently valued at $171,461. And then we're going to take a step back. We're going to take a look at the last 68 trading days and how they have progressed over that time period and see, hey, is this actually working? How easy is this? And could you do it? So let's get going. And then I'll also talk about considerations for tomorrow, like the covered calls and the cash secured puts I'm going to run. So let's get over there. All right, guys, let's talk about July 18th. I know I said the 19th is actually the 18th. For my strategy, I'm getting a little bit more aggressive with using more margin, and I'm not going to go super crazy using 100% margin, and like my buying power is about like 570,000. I'm not going to use all of it. I'm just going to use a fraction of it just so I can squeeze out a little bit more money. And so ideally, I want to own 300 shares of QQQ, and then that would allow me to run 2 cash secured puts. So in total, I can run about 5 options contracts per day. So first thing I did for July 18th is I ran 2 cash secured puts. And the way I trade, because a lot of people ask me in the comment section, like when I trade first thing in the morning. Like within the first 30 minutes of the market opening, I have ran all of my options, and then I'm just waiting for the bell to close and see what got assigned, what didn't. And then ideally, if everything's going good and I didn't sell below my cost basis, I don't have to worry about rolling options. But if the market happens to go more bearish, it's a little bit of a correction, I may consider running options below my cost basis. And then with that being said, I'd have to keep an eye on to make sure that my shares are not going to get assigned at a loss. And if they were to get assigned at a loss, I would just roll the option a couple days out, make sure I get more premium, and then just wait it out. So that's kind of the thought process there. But for my cash secured puts, chose one strike price at the 561, second one the 560. And the way, if I'm running multiple options for a specific underlying, say for example the QQQ, I like to spread out the options. Some of it I like to capture more premium. Some of it I like to capture more appreciation. And if I have more options contracts, that means I can spread out the risk and I can adjust my strategy as needed. But if I'm running one, then you have to choose the one that works best for you. But the market opened at the 562.07. I chose something relatively aggressive. I wanted a higher premium. And then the price for me isn't necessarily a concern ever. I just like to make sure I'm like $1 or $2 away from the current value. Therefore, I can lock in a better price than what it was in the morning and then capture that premium. But then for the flip side, for the covered calls, I like to at least get like $1 or $2 more just so that I can capture some upside and capture some premium. At the end of the trading day, my 2 cash secured puts, they netted me $65 and $41. So I made it by $106 I made $106, not even using my own money. And let me explain what happened here. So for my covered calls, I'm pretty much using all of my cash, maybe like a little bit of margin. But then for the cash secured puts, it's not actually my own money. I'm basically reserving margin collateral to run these options. And then if they expire worthless, I get paid this upfront money, this upfront premium, the $65, $41 in the beginning of the transaction. However, if these cash secured puts were get assigned, then I would then buy 100 shares of the underlying at that strike price. And then therefore I would use margin to then buy that. But just for the cash secured put, I didn't have to pay margin. I didn't have to accrue margin interest, but then I was able to make an extra $106. So therefore it's like a way to squeeze out more money if you could do that. And I like to do that. And then the second thing I did as I ran covered calls on the QQQ, I have 3 different buy-in points, or DCAs, if you will, the 562.47, the 32, and the 21. And therefore, whenever I run covered calls, I do not like to choose strike prices below my cost basis. And let me explain. So here I chose strike prices of the 563 because that's higher than the 562. Therefore, if this were to get assigned, I'd make that appreciation, that $53 of appreciation plus premium. So that'd be a win-win for me. So therefore, on the 18th, that did not happen. Market opened to the 562.07, chose something about $1 away from the strike price. I was trying to maximize premium for this day, and that's what happened. One of my options got me $83, the other one $87, and the third one $67. And the market closed at the 561.25. So therefore, everything went pretty good. Everything went pretty good. And in total, I made $343 on July 18th. So that was quite nice. Moving on to July 21st, which was today. That was a monster Monday. We made a decent amount of premium, made some decent amount of appreciation. So let's dive into it. It's the same thing as before. Since all of my covered call contracts expired worthless, I then still have my 300 shares of QQQ for the next trading day, which was Monday today. And let's dive into it. For Monday, for my covered calls, I chose strike prices of the 564 for 2 of my covered calls when the market opened at the 563.80. The reason why I chose strike prices at this 564 is because my cost basis was that 562. So therefore, I've already locked in, $150 of appreciation if I were just to sell at this 564 mark, plus add in premium. That would have been a great number. So therefore, my first option, the 564 strike price, netted me just $95 of premium. Interesting enough, even though the market closed at the 564.16, one of my options was not assigned away. I was assuming both my 200 shares of QQQ to get assigned away. However, that did not happen. One of them, they didn't take them away. It was weird. I don't know why. But made $95 of premium gain there. And then for the second QQQ covered call contract, it was assigned away. I made $168 of appreciation as annotated by the appreciation tab here. I've actually updated the spreadsheet to more accurately describe what we're trying to talk about here. So made that $168 of appreciation, made $95 of premium. Strike price was, just like I mentioned earlier, the 564. And then these shares were assigned away. And then for that one transaction, I made $263. Moving on to my third covered call for QQQ, I chose a 565 strike price. And kind of like what I mentioned earlier on the previous day with my cash secured puts, I chose a different strike price because I wanted to, capture more of that appreciation and upside. So therefore, because I've already locked in a good amount of premium with the other 2 covered calls, I decided to choose a strike price further away for this third one so I can capture that momentum upward. So I made $45 of premium and the market closed at the 564.16. It actually, 30 minutes before was at this 565. So I was close to losing all of my shares, or getting all of my shares assigned away. And then basically tomorrow, Tuesday, I would have had to buy back in or just ran very aggressive cash secured puts to make some more money. But at the end of the day, it was expired worthless because the market kind of rebounded backwards. And yeah, so that was nice. For my cash secured puts, chose strike prices of the 563, 562. That was just below the cost. That was below the open. And ideally, the market seemed a little strong in the market seemed strong in the pre-market. Therefore, I was more aggressive with my strike prices. And whenever the covered calls are trending higher in premium, that I think that's where the market's going to trend in a more bullish direction. The cash secured put premium was pretty low, so therefore I didn't think it was going to go in the put direction. So I decided to go a little bit more aggressive with my cash secured put. Cashed in $68, cashed in $40. Life was pretty good. All expired worthless. So out of my 5 option contracts, only 1 got assigned away for me and the other 4 expired worthless. So I just locked in a good amount of premium. So at the end of the trading day, I made $511. So that was quite a big monster Monday, and I love it. I would like to see all of my trading days to look exactly like this. All right, now let's head over to the other side of the spreadsheet and talk about the last 68 trading days and track our progress and how we've been doing. Now that we are at this beautiful metrics tracker, let's get into it. For the 67th day of trading since April 11th, like I mentioned, July 18th made $343. July 21st, we made $511. And for today, the account was looking at that $171,383.59. If you look at the total amount of appreciation gain and premium, I have made about $21,494.15 in those 68 days. And if you look at the percentage gain, we're at about 17.14%. So that's pretty good if you ask me. Let's take a look at the trade win percentage. I'm winning at 98.53% of my trades. I had 67 winning days, 1 losing day. And as mentioned, I've only been doing this for 68 trading days. The average premium per day that I'm making is about $316, and the average weekly premium is about $1,535. The monthly premium isn't going to fluctuate too much. It's whenever July completes, then we'll have more data. So that would be the 4th month. So April, May, June, July. Yep, it would have been the 4th month. So that number may either go up or may go down. And in the yellow here, I have estimates based off of how this account has been forming. And I'm a big believer in coming up with the vision and manifesting is the wrong word, but dreaming and then trying to get to our goals with specific data. So based off of my trading performance right now, if I took the weekly premium and multiplied it by 52, because there's 52 weeks in a year, I would make about $79,835.41. So theoretically, if I were to do this for 12 months, I would make this much money in premium income or appreciation income. So that's a significant amount of money just for having an account that's about $171,000. With that being said, I'm not living off of this money right now. I'm just reinvesting all of it and trying to grow the account. However, whenever the time comes for me to start pulling out money, I would probably come up with a balance of maybe keep 50% in, some of it for taxes, and then the rest would be for spending and bill stuff. But we are not there yet. And of course, we should plan for it, but that's years away. And then I'll have years to decide what I actually want to do. But if we look at that as a percentage, I'm theoretically over a 12-month period going to make about 55% return. And basically off of the last 68 trading days, that's going to range. It's been ranging somewhere between 49% and 60%. So 55% is right in the middle. Love to see it. Love to see it. This here is like a goal that I made when I first started back on April 11th, and we can just bypass that. And why are we doing this in the first place? Because eventually we want to stop working, or maybe you actually like your job, but having more money would allow you to live the lifestyle that you want. So therefore, this is what we're going to dream. So my thought process is I want to find a mechanism to, one, retire early. But retire is like the wrong word because I'm never going to stop working. I can't sit and do nothing. I'm not that type of person. But then it would allow me to like change jobs. So instead of like, chasing the bag and chasing the money, I'd be able to find something that I actually cared about, and then it would make an impact in what I believe would make an impact. So the way I calculate this is for every single year, whatever the numbers are going to come up with based off of my trading performance, I'm going to sell lock them. So at the end of 2025, whatever the numbers are going to be, this won't be an estimate. It'd be an actual number between how much taxes I'm going to have to pay, the estimated income, and what my end of the year value would be. Once I get those numbers in, I sell lock them. But then the remaining end of year values, estimated income, that's going to change based off of my trading performance. So if the trading performance is good, the numbers are going to stay good. But if my numbers start going down and start tanking my trades, then these numbers are also going to reflect that. But by the end of 2025, I should have an estimated income of about $56,805. So the way I came up with this is based off of what I've made so far. So we've made that $21,495. And based off the account's performance, I should make another $35,000 by the end of 2025 because we have 23 weeks left. Conservatively, if I can make $23,000 more, basically $1,000 a week, I think that would be a win. But I like to shoot for the stars, and this is what my account has been performing, and I hope it stays that way. And so that's where that $56,000 comes in. It's that hopeful number plus what I've actually made. That's going to be what the next 23 weeks are going to look like. I'm going to have to pay about $19,000 in taxes, almost $20,000, because I'm a high income earner, and Uncle Sam's going to want his cut from all of the risk I am taking to make this money. And then the end of the year value should be about $186,000 after taxes, estimated income all come together and are added in, subtracted out, But let's see. For me, I would like to see how this project goes up until 2030. of these covered calls and these cash secured puts. If I stay consistent, I stay relentless, and I stay locked in, I theoretically, based off of what the performance is of my account right now, yes, we're in a bull market. Yes, the numbers can change, but based off what the numbers are showcasing now, I theoretically in 2030 could be making about $343,000 of estimated income. So that's, you know, appreciation gain, premium, it's like that calculation. And for taxes, because I'm going to be making a decent amount of money, I would have to pay about $120,000 in taxes. And at the end of the year marker, I should have about $852,000. Somebody made an interesting comment of making an LLC and to avoid that taxes. If you have an accountant or a CPA you know of that can hook me up, send them my way. Would love to do business with them because I do not want to pay $120,000 in taxes. But let's play the dream scenario, because 2030, like, yeah, this would be a good number to like retire off of in some people's eyes. But, you know, lifestyle creep is a serious thing. Inflation is a serious thing. And is that going to be enough money to last, you know, 30 years? It theoretically could be, but I live in a state where housing is super expensive. Gas is super expensive. Cars are super expensive. Everything is just super expensive because, yeah, it is what it is. So would that number be enough? 343,000? Oh, probably could be, yeah. But I think I would, if by 2030 I can pay off my house or pay off a majority of my bills, sure, I would consider it. But you have to take into consideration, you know, my partner, we might have kids one day, and the more kids you have, the more cost it's going to be. So then it's like, okay, could I be also trading 20 minutes a day, make this income, also work, grind it out, and then maybe by realistically 2035 be retired? It doesn't even have to be like an even number. It could literally be a year after, like 2031, 2032. You know, those numbers are still fantastic, but ideally, if you're patient and wait a little bit and let the compounding effect to make $1.5 million a year running trades for 20 minutes a day, oof, that's easy peasy. That seems way easier than anything else. That's, you don't have to work a day job, you know, working 48 hours a week to make $1.5 million. I'm going to sacrifice a little bit. I'm going to be sending as much money as I can in this account so that we can make this a reality, guys. Let's make it happen. Let's not dream it. Let's do it. And then, of course, for, you know, fun, we got to look at, you know, if I were to continue working until 2058, because I'm 31 years old, about to be 32 in a few months now. But 2050, I think I'd be 59 and a half. I theoretically would own the universe. You know, I'd be making $1.6 billion a year. Account would be at 4.1 billion. Honestly, once I hit the billions, I wouldn't even say billions. Like, honestly, if I hit like $10 million, I'm just throwing all of it into like a high income ETF, make that 8 to 10% a year, and then I don't have to worry about anything. Money just shows up in my account. Automated, baby. But until that time, we got to be wheeling and dealing these options. But yeah, guys. Okay, now let's take a look at the weekly tracker. So we've actually completed our 15th week of trading. And that 15th week, we have netted about $1,814, which was a monster week. We have 2 weeks in a row where we hit the 4-digit club. This is ideally what I want to see. I cannot wait for the day that these, you know, 4-digit club turns into 5-digit club. We're making $10,000 or more a week. And maybe one day, $100,000, but we'll see. And currently for the week we are in, we are already at $511. So we're already halfway to our goal of the very conservative $1,000 a week. And I still have 4 trading days left. So even if I make $125 a day, I'd be able to hit this goal. That's relatively reasonable. For the monthly tracker for July, we're at $4,538. Previous months have gone pretty good. April is just a learning curve, a little bit of pain, a little bit of learning, but then we got back on track and then we're crushing it. $8,000 in May, $6,500 in June. We're already at $4,500 in July, and we still have, I believe, 8 trading days left. So we have 8 trading days to make up thousands of dollars. Let's get after it. And for the yearly tracker, we've already talked about it, $21,495. So boom, baby. If you're asking me, this is super successful. Love doing it. Super easy once you get the hang of it. It is scary at first. I would say scary is the wrong word. The biggest barrier to entry is having the amount of money to run 100 shares of an underlying. For me, I am blessed that I happen to have an account this size so that I can run it on an ETF. So therefore, I can minimize some of the impacts of a single stock risk. So what that means is like I have the whole broad market index where the fluctuations aren't going to hurt me too much versus if you have like, somebody has like a Tesla or nvdy and there's just some news that comes out and then stock tanks 10-20%, you have that problem. But if you invest into an ETF, you don't have to deal with that issue. So I do have that benefit on my side, but doesn't mean you guys can't do it with a smaller account. You just choose a stock that you actually believe in that's a winner in their marketplace. You invest into it like you would long-term investing, except you're just running covered calls on it. So therefore, if you're choosing good investments and you're choosing the winners, you're going to do just fine. Cool. That being said, guys, let's head over to Robinhood. I'm going to show you guys my buying power. We're going to start discussing some considerations and then what I plan on doing for tomorrow. So let's get after it. All right, guys, we are back at Robinhood account, still 171,000. Let's take a look at the buying power. So my buying power is currently at $465,000. And let's take a look at what's in my account. I have about 22 shares of SPY, and then I have 200 shares of the QQQ. For SPY, every time I make premium, I try to invest and buy a certain amount of shares of SPY just so that as I'm slowly compiling more shares, I can capture some of the appreciation before I hit my next 100. And then once I hit my next 100, then I could just run covered calls against it. I would have captured a ton of appreciation by that point, as long as there's a bull market, of course. So therefore, that's kind of the strategy. I haven't bought shares for SPY in a little bit. I think I have like $2,000-$3,000 of SPY I still need to buy. I've just kind of been hanging out and the market keeps going up. I'm hoping for a dip, but then it's not happening. But I will take a bull market over any bear or correction any day of the week. So don't listen to me. For the QQQ shares, I have 200, and I think tomorrow morning I'm probably just gonna off the rip buy 100 shares so I can have a nice even 300 shares, run 3 covered calls. So let's look at the buying power. So like I said, I have about $420,000 of margin total I can use. I have $44,000 in cash. So if I were to buy that 100 shares of QQQ, only about $12,000 or $13,000 would be on margin. So it's such a small amount of number for me to make extra hundreds of dollars. So if I base off of $12,000 of margin over a 12-month period at 5.75% interest, and you divide that like per day, that's like less than $5 a day. And if I'm making hundreds of dollars a day, it's totally worth it. And the calculation isn't even worth it just doesn't make sense to not use margin. But ideally, yep, I'll buy that 100 shares of QQQ off the bat so I can have 3 covered calls of QQQ. And then let's look at this event contract. So this is important. So this is what I was talking about early on in the spreadsheets for July 18th. This is the amount of money that Robinhood will let me borrow as margin, but it's unless I actually buy shares with it, like cash secured put gets assigned, none of this money is going to get margin interest. So theoretically, I can use this $139,000 to run cash secured puts to then generate an income stream. And then if they don't actually execute or get assigned, I make that upfront premium, and then this collateral that's set aside to buy the shares for the event contracts, it's not going to get used, and then I could rinse and repeat this the next day. But the one downside is say that the cash secured puts I run off this event contracts margin. That means if it were to get assigned, then I would have to then buy $140,000 of that stock at that strike price, and then I'd have probably 5 covered calls of QQQ versus just the 3. And then the market keeps going down, then I'd have to bag hold margin with an asset that's losing value, and then I'd have to figure out how to make premium and then roll options and things like that. So it gets a little complicated, but end of the day, it's nothing to be afraid of. If they get assigned, just run covered calls against them until you sell them. It's just that simple. Let's look at QQQ. I'm probably just going to stick with QQQ for tomorrow. And people ask me why I use QQQ. for some of my trading versus SPY, I definitely have been more biased towards QQQ because SPY is a little bit more expensive. And I will say QQQ I'm able to generate more income using the QQQ, generate more income off the QQQ, and it's cheaper, so I can just buy more of it. And the more you can buy, the more money you make. This makes sense. So you guys know me. I'm going to beat the dead horse here with this buy call. For any new investor, don't ever press this button, buy call. You don't need to press this button unless you're like a seasoned veteran options trader, buying calls. Don't do it. I don't like them because if you buy this option and then it goes against the analysis you made, you're losing money every single day that option isn't going your direction. You're losing money to time decay. So I would prefer you just own the 100 shares and just run covered calls, selling them and just generating premium that way. You own a good asset and then you also make money, off of the premium selling those shares. So I just recommend that. So let's take a look at sell a call. That's how you run a covered call, sell a call. I would like to run dailies. So we already have July 22nd, which will be Tuesday, lined up. So current price for QQQs is 563.32. That's usually called at the money. And if I were to buy those 100 shares at that money, I would choose a strike price at this 564. So ideally, I can maybe lock in $155 of premium. But then for my other 100 or 200 shares of QQQ, if the premium is looking at this dollar mark, I'm probably just going to run 2 options at this 565. So basically running 3 covered calls from QQQ, I can make about $355. So if that would happen tomorrow, that'd be fantastic. But whenever the market opens, I think usually the premiums look about 25% less. And then people ask about deltas, what deltas I like to choose. Choosing a delta at this 565, which is about $1.70 away from the current price. It's about a 0.40 delta. And if you're not familiar with deltas, that means there's a 40% chance of this option executing. For the 564, that means there's like a 50-50 shot that this is going to execute. Ideally, if I do buy in at that 563.31, maybe I wouldn't run this 564 because that delta is too high. I might just choose 3 at this 565, or maybe 2 at the 565 and then 1 at the 566. So it really depends on what the market's looking like. If everything's super green and bullish, I'll probably choose appreciation over premium. But then if it's kind of like stagnant and nothing going on in the pre-market, and when the market opens, it just stays flat, I'll probably just choose, deltas of that 0.3 or 0.4. Let's take a look at the cat secured puts for QQQ. Let's see. Yep. As you guys can see, the cat secured put premium is going to be a little bit lower than the covered call premium because everything is trending in a bullish direction. So the put premiums are going to be less because there's a less chance that's going to hit. That being said, let's take a look here. When it comes to cat secured puts, at a minimum, a couple dollars away. So this 562 at this 0.26 delta looks like a fantastic number for cat secured puts. 0.2 to 0.3 deltas are pretty good. Sometimes I'll choose a 0.4 delta just so that I can cash in more premium and then actually get these sizes shared so that I can purchase them and then just run covered calls against them. So we will see. Maybe I might run one cat secured put aggressive at this 563, lock in that premium 0.35 delta, and then the second one at this 562, see what happens. Boom. Boom. Yeah, so life would be good. That's what I plan on doing for tomorrow. With that being said, guys, the market could potentially change in the morning. It could even go further higher. It can go further lower. Nobody knows, but that's kind of what the thought process is tonight heading into tomorrow, July 22nd. So that pretty much wraps up the video, guys. Hope you guys learned something new. If you have any questions, throw in the comment sections. Let's stay locked in. Let's stay disciplined. Let's stay harvesting. Matt out. I will see you in the next video.